Good morning, everyone. It is December 6th, and we have just had the final Bank of Canada announcement for 2023. It's the 8th of the year and the third consecutive time that the bank has held the overnight rate. Josh, tell us what's going on.
Well, it very much expected. Everyone was of the belief that the bank would hold. They still are saying that if need be, they've got their eyes on inflation, they'll pull that lever and increase the overnight rate again if they have to, but there's many indicators that they won't. We've seen GDP contract, so spending is down. Unemployment in Canada is now on the rise. We're seeing inflation come down. One thing, a key factor that's kind of interesting is one of the things driving inflation is the housing market and the cost of shelter, which you could really count as a byproduct of these increased interest rates. So based on everything we're seeing, reading, hearing, it does look like there's a brighter future for interest rates here coming in 2024. That's where we're going, right? 24?
I think so, yeah. That's where we're heading, yeah.
So what are your thoughts on that?
Yeah, I think some key points that you brought up there. One is that they really only have the lever of raising rates to deal with inflation, but it got to the point where it almost became inflationary because interest rates going up made mortgage payments go up, made rent go up, and that's driving inflation somewhat. I guess one of the other unique things is we look at the US and what's happening there, and we're not seeing the same negative economic data coming out of the States, quite the same as Canada, but this kind of leads into what we've talked about on previous videos, that the Bank of Canada is one of the most powerful banks in the world in the sense that when they raise rates, its impact on the consumer in Canada is greater than, say, the US. That's somewhat tied to the fact that Canadians are more in debt, but more importantly, they have shorter terms. So unlike a 25 or 30-year term in the States, an increase in rates will impact Canadians faster. So we're seeing the impacts of the rate increases really hit Canadians now. That's not a great thing. Obviously, things have been really tough on Canadians, but the good news is it looks like we're maybe now coming to the point where the bank can actually settle things, and rate cuts in 2024 looks really quite probable.
Yeah, certainly something we're hearing a lot of buzz about, right? And I don't think we'll get too deep on it in this video, but you talked about those shorter terms and the renewals, and correct me if I'm wrong, but I think within the course of the next 3 years, 60% of all mortgages in Canada are coming due. 2025 is the highest number of mortgage renewals in Canadian history. Yeah. So this is going to be something, it's certainly in the back of the bank's mind as well. The payment shock is something that we got to be wary of, right?
So hopefully we see the cycle come where some lower rates and some rate relief are on the horizon for those renewals that are coming down the pipe for sure.
An early Christmas present would have been nice though.
Yeah. Well, thanks so much, everyone, for tuning in. We just want to wish everyone a very happy holidays, and we'll see you in 2024 for the next announcement. This is Josh and Joe with Mortgage Connection.